Morning everyone, and welcome to this morning's Forex webinar. I'm just checking that you can see what I see on my screen. I'm looking over to David and I see that you can. I'm not quite sure why I put 7 o'clock. I do apologize. I should have put 7:15. So if it's a little bit too early for you, as I said, my fault. I think we might go back to 7:15 next week. It's a much more civilized hour. Certainly for me it is. Before we start, may I just draw your attention to the disclaimer that I know you can see. As you know, this can be a very risky business, so please don't even think of using money that you cannot afford to lose. If you're new to this session, I run this together with my husband David, who I can see is sort of typing away and saying hi to everyone. We share the session between the two of us. I tend to focus on MT4. Well, actually, I tend to focus more on MT5 these days because of the additional time frames that it allows, and that's quite pertinent because that's what we want to talk about today. We want to really look at a little bit more detail into the price cycle, multiple time frames, and how one of our indicators that we've developed, the currency strength indicator, can actually help us in identifying those areas of overbought and oversold. So before we start, let me just pass you over to David, and at least he can say hi as well.
Thank you, darling, and a very good morning. Well, it's good morning for us at any rate. And I'm just turning my volume down a bit. It's a bit loud in my ear. That's better. A very warm welcome. Good to see you. And wherever you are in the world, thank you for joining us. It's much appreciated, and we do enjoy running these sessions. If it's the first time you've come to one of these, as Anna said, we run it as a two-hander. Anna's on MT5, and I run the NinjaTrader platform on my side. So we flip-flop between the two. If you have any questions, please just drop them in the chat box, and we'll be more than happy to answer them either on the chat box itself if they're short questions, or longer ones we're happy to answer on air for you. And we'll answer any question that you have about either the session or trading in general, or indeed the price charts themselves. I'm not sure whether I was going to mention this or not, but certainly on one of the new things that's come along on MT5, which is really, I'm not saying it's taking over from MT4, but the enhancements that MetaQuotes are now adding to MT5 really does make it a very attractive platform, not only because you can trade as a true multi-asset platform, so you can trade indices and commodities and some stocks on there as well and everything else, but in addition to that, it gives you much greater flexibility over the MT4 platform, certainly in terms of timeframes. And one of the things that caught my eye the other day, which they've just rolled out, is the opportunity to detach charts. So if you're running multiple monitors, then you now have the ability to actually detach a chart and move it across to another monitor, which you never used to have before. You used to have to run multiple versions of MT4, which is explained on our site. So I haven't explored it yet. I don't think Anna's explored it yet because it's very new. It was rolled out, I think it was the 26th or 27th of October. On the MetaQuote site. So it just gives you an idea that how MT5 is really gradually gaining traction, and you will find it increasingly available through your regular MT4 brokers alongside the MT4 platform. It's got exactly the same look and feel, so there's no huge learning curve. It's a fantastic platform, and it gives you much more flexibility. I'm going to pass back to Anna, and we will get going.
I've got this slide up actually. It's from our Forex trading program, and those of you who are with us today will obviously recognize it. It's actually an explanation of Richard Wyckoff's second law. The methodology that David and I use, in fact we use all the markets that we've been involved in, all the time frames, is of course volume price analysis. And this is probably, I'm going to do some more slides, but as I said, this is the one that's from the program, as you can see here. And basically what it does, it shows you what what we mean by a price cycle. And if we go over to the left here, obviously this is we've had a period of accumulation and buying, and then the price rises, it goes to the top. you have distribution, you have what we call a selling climax, then it goes back again, and then it rises and falls. So you get a kind of sinusoidal wave. That is a typical, you know, what happens in a typical price cycle. Now, of course, it doesn't, you know, it's not smooth. It's very much as you see here. It rises, then it pulls back. It rises, and it pulls back. So if you like, this is your primary trend, and these pullbacks and corrections will be your secondary and minor trends. Now, the forex market is particularly good for cycling, if you like, through this sort of wave, if you like. So you get you get price down here, accumulation. After a big fall, it will base. It will move sideways, but there will be the accumulation before it starts to move higher and back into a primary trend. How long that primary trend will last depends on the time frame that you are looking at. And one of the many factors that we have to learn as traders is actually being able, first of all, to understand where our currency pair that we like to trade, assuming that we have a favorite pair, or maybe we're looking for a trade, where is it in that cycle, in the time frame that we are looking to take a trade? Because it's what you may see in one time frame. In other words, you will see an overbought and oversold situation, and the 30-minute chart of the CSI is just a perfect example of this. And the pair that I'm going to use to explain this in perhaps in a little bit more detail, and hopefully it'll become clear to you, is this is the white line, which is the New Zealand dollar. And you can see here it has clearly been rising, rising strongly. And what has also been falling very strongly, amongst other currencies, is the Japanese yen. Now there is a particular reason for me highlighting the New Zealand yen. Is because if you were with us yesterday afternoon when we looked at the indices, trading yesterday, trading across the markets, and particularly in the indices, has been, from a trader's perspective, has been fantastic. There have been some huge moves, a lot of volatility, lots of trading opportunities. Possibly not so clever if you're an investor. You know, maybe depending where you got in, you may have seen your holdings, you know, the value fall. But as a trader, it is very much a trader's market. And in the afternoon, we saw them shoot up, then they came off, and then they came off quite heavily, didn't they, David? And then suddenly, just before the end of the session, they shot straight back up again. And that kind of move that you get in the markets on equities and indices is reflected particularly in what we call the risk currencies and currency pairs, of which the New Zealand yen and the Aussie yen are two of the best examples. So in a way, looking at this at the CSI as we see here on the 30-minute, where we've seen the New Zealand yen rise and we've seen this sharp fall in the Japanese yen, is also, it's not just a reflection of what is on the chart, but it is also a reflection of what is going on in the broader market. So if you like, what I'm trying to say here is, by all means, the price action you see on the chart will be tradable, and we're going to look at the New Zealand yen in 30 minutes in a little bit more closely. And you say, oh great, I can see it's very much it's right at an extreme, that's at an extreme. Then something clearly on the chart, it's got to a point in the cycle that possibly it is going to roll over. And when we look at the chart, you will see what I mean by that, and you will identify whether that is how that is reflected in the price action, because you'll see certain candles, you'll see maybe a shooting star, you will see a hanging man, you'll see any number of that. You may see a bearish engulfing candle, candles that confirm or validate that the price cycle has reached this particular point, if you like. It's reached an overbought position for the New Zealand yen. Now the decision is, this is the 30-minute CSI, and we'll look at the 30-minute chart. The next Is your 30-minute chart that you have seen, is it your entry chart or is it your benchmark chart? Because price cycles, what you see in a price cycle on one time frame may offer a trading opportunity, but when you compare it with another time frame, a slower time frame, in this case with the 30, you will see the exact opposite. And this is where so many traders get completely wrapped up and confused about timeframes. They maybe see something, as we can see here in the 30-minute chart, and they think, oh great, I can, and they look at the candles, and everything seems to line up from a technical perspective, but they don't. Their field of vision is only restricted to one chart. They don't look to a faster time frame, and they certainly don't look further upstream to see, well, actually, is what I'm seeing here just a correction that may be some of what is happening in a slower time frame, or is it actually possibly the start of the price cycle sinking, if you like, not only just on a 30-minute, maybe on the hour, and further on and further on. The issue then becomes is what I see on this chart, having determined 30-minute for me is actually my benchmark chart. It's not a chart that I use trade. I tend to trade the faster time frames, which is why I've got the 6-minute and the 12-minute here. But the 30-minute, it tells me on my benchmark, where am I in the price cycle? Well, I can see I have some, there is an overbought and oversold situation with the New Zealand dollar. Down on the I've got the 6-minute and the 12. The question then becomes, does it offer an actionable trade? Sometimes it does, and sometimes it doesn't. And it may or may not offer an actionable trade for all sorts of different reasons. First of all, it's not just the technical picture that you have to be aware of. You have to understand what is the role of the New Zealand dollar and certainly the Japanese yen in the market. Because all currencies, particularly the US dollar and the Japanese yen, they have a particular function within the currency market. So not only do you look at the price action, but you also have to see, understand that price action in the context of the broader market, and also obviously maybe there's some fundamental news as well. But I just want to have a look at the chart, and I've actually brought the charts up on the on MT4, and this is my 30-minute. Now that overbought and oversold. In fact, if I bring a drawing tool up, let's have a look. Here's my drawing tools. Oh, there they are. There we are. Spotlight. Right, was actually here. This was the point, and we can see here. So if you looked at the 30-minute, you can see that the New Zealand yen has had this very, very nice move higher. Certainly, if you go right back here, we've got the volume point of control. It went up, and then it had a sort of a price wave within a wave, or a price cycle within a cycle. You had the usual consolidation, and then it bounced off this level here. It's about 73.25. On the 30-minute CSI, this is what it was highlighting, this shooting star. So if the 30-minute chart was just one chart that you were looking at, would that be, is that a valid opportunity, as it were? Well, it's a shooting star candle. I know we haven't got a huge amount of volume underneath it, but you have to read the volume in context of the session that we're in, and volumes are much lower. Coming out of Asia, we're into Europe now, and of course they're going to increase dramatically as we come into London. But that is what we were seeing on the 30-minute chart. Now, when I said earlier, you need to go and have a look. There we are. Take that back again. How does this price action figure? How does it compare with what is going on in a slower time frame? And as I said, because of this, the New Zealand yen is a risk on currency. So when equity markets are in a positive, and they are, traders and investors are looking to take on more trade, the Aussie yen and the New Zealand yen will tend to well, they do, they go up. So if we look here and we go on the daily chart, this is what I mean. This is the overnight candle for the New Zealand yen. And in fact, as I said, yesterday from a trading perspective in the New York session, it was, from a trading perspective, it was amazing. Up, down, lots of very strong moves. But it looked as though the end of the session would end in negative territory. It didn't. That sentiment was picked up in Asia, and that is the result of this candle. The volume underneath it is low because, as I said, partly because of the session, and maybe that volume there is nothing like the volume that we see here, or even the volume that we see under this candle. So possibly it's all a bit of smoke and mirrors, as it were. But we'll have to wait and see what happens. So then we come to let's go back to the 30-minute chart here, and we go down to, I've got the 5-minute chart because this is my MT4. The opportunity to take the short that was potentially being highlighted on my benchmark chart hasn't actually materialized, as I said, because this is the other thing we have to understand. Currencies and markets can stay overbought and oversold an awful lot longer than we can stay solvent. So I hope I've explained that. I know I spent a little bit of time on it, but I really wanted to, to bring in, try and explain to you what you have to understand about the price cycle, how you have to interpret that, not only in the time frame that you're looking to take the trade, but also against another time frame, a slower one and a faster time frame, and that the decision you have to take is when you see the price cycle approaching these overbought and oversold situations, is there the possibility of taking the trade? As I said, in this case, for me, it will be on a faster time frame. It will be the 3, the 6, the 12-minute chart. Is there enough in it to actually take that, even though I am going counter to what is happening in a much slower time frame? And those are decisions to which there are no right and wrong answers there. It depend on a huge number of factors. First of all, not least, is the pair that you're looking at, does it actually range sufficiently in the faster time frames to be able to do that, and the spread that you would be taking on. So that's what I wanted to say. I think David's got to move over to your NinjaTrader, David. Yeah, sure, no worries. And obviously, if you have any questions, please put them in the chat box. And can I also say, as David mentioned earlier, all this is explained in huge detail in, as I said, in the forex program. What we do here is you literally just skim the surface. But at least if it's something you've never thought of before, and how to interpret price action, but also against the backdrop of market sentiment, obviously fundamental news, and realistically these days, obviously the political situation, of which take your pick at the moment.
I just wanted Anna to pull up the 30-minute again, because it really does highlight the whole issue of one of the biggest problems we all face, and we all face it, let's be honest, is when you enter a position in the market, is having a very clear focus on your time horizon, what we call the time window. And what you constantly have to try and do is to limit your peripheral vision. In other words, focus just on that particular segment of time in the market, because it's so easy, and we've all done it, where you enter a position based on maybe a 5 or 15-minute time horizon, and then it doesn't quite go your way, so you slide out to a slower time frame, and you're constantly looking for validation in slower time frames of what you've done in a faster time frame. And this time frame really does highlight that, because the longer term trend of the time horizon is clearly bullish, but within that bullish momentum, which is stretching over what 2 or 3 days, we've got a weekend in here, but basically a couple of days, 2 or 3 days, is within that time horizon, within the pullbacks, which are quite extensive, where you see it there. Within that trading opportunity, there will be many traders who will be short that particular pair. Equally, counter to that, there will be a whole raft of people who are on slower time frames looking at the hourly and probably on the daily and quite happy to remain long because they have recognized the fact that this reversal is just that. It's a reversal. In other words, for this particular chart, from the bottom of the chart to where we are currently trading, that is what we call the primary trend, which is the bullish sentiment which has remained in place for 2 or 3 days. Within that bullish trend, you have the secondary reversals into secondary trends and into minor trends thereafter. Those are perfectly valid in terms of trading opportunities on a faster time frame, and there will be hundreds, if not thousands, of people trading short at that point. Plenty of opportunities to make money in there. But cognizant of the fact that as an intraday trader, you are trading against what is currently the dominant trend for this pair. And that is where volume price analysis comes in to help you understand where these periods of price action occur, and also, more importantly, whether it is a reversal from a primary to a primary, in other words, from a bullish trend to a bearish trend. In other words, we've had the complete cycle, if you will, or at least half the cycle from a trend higher into a distribution phase and down into a complete reversal, back down the other side of the mountain, if you like, got to the top, now we're coming back down the other side. Or are we simply seeing a pause point in the climb up the mountain, a slight resting point, a slight reversal, it's a secondary, before re-establishment of the primary trend? And a lot of that is defined by volume price analysis, and it helps you to understand whether that is occurring or not. Now, this can be on a 1-minute chart or a daily chart, makes no difference. That is how the markets work. And it's absolutely key to understanding and trading that you highlight your time horizon and what happens in terms of price action. All price action is self-similar. As Anna said, the forex world is, I wouldn't say unique, but it is certainly the closest proximity to the constant movement from overbought and oversold. Other markets do it, but the reason it happens in forex is because no currency pair ever goes to zero. It might happen one day to the euro, but technically it doesn't happen. In stocks, it does happen, and it happens a lot. In this market, it doesn't. So what you have is a constant movement from overbought to oversold and back again in all time frames. And what it comes down to is using multiple time frames, not only on the charts, but also starting with the currency strength indicator, which gives you that information visually as to where a currency is in its travel and whether it's overbought or oversold. What is it doing in the slower time frames? Am I looking at a reversal here? Because if you think about it logically, if you get a reversal from overbought and the currency and the consequent currency pair you're looking at starts to trade in the opposite direction, if that is a true change in trend, then it will ultimately move through the time frame. So it'll start on a 1 minute, up to a 5, up to a 15, through the 30, up to the hour, and so on and so forth. And then it's a question of obviously looking at the charts in multiple time frames and picking off the associated volume with all the other technical indicators to help you establish whether this is indeed something which is rippling through to the slower time frames. And of course, one of the indicators, you'll see that on the trend monitor, because you'll start to see changes in transitional color. You're looking at the volume point of control, you're looking at support and resistance and all the other factors that then come into play. You're looking at the VPOC there. That is the fulcrum of the market, which is we've pulled away from very strongly. That's where you have the major concentration of volume on the yellow line there. And then as you move up and down the charts, we start to hit the price-related support and resistance, which is with the dotted lines there that you can see. Excuse me, I'm just going to switch off for a moment.
wants to, somebody called Rob H. Could you just explain the price cycle again?
Yeah.
Oh, sorry, audio's fine.
Okay, great, thank you. Sometimes I rattle on for hours with the volume off, which is always quite interesting, and sometimes I talk at the wrong chart, which is more interesting still, but there we go. Sorry, what were the questions?
Could you just, Rob said, could you just go over
the price cycle? Yeah, sure.
Do you want that slide?
I can do it off the top of my head. The cycle that every market goes through, and it occurs in all time frames. So this is not specific to daily or weekly or monthly. This occurs in every single time frame from a 1 minute through to a 1 month. And all that's relative is time. So what you're seeing is a constant movement from overbought to oversold and back again. In other words, from accumulation to distribution, accumulation, distribution, on. And it is a complete cycle. On a 1 minute chart, that might take a couple of hours, maybe 2 or 3 hours. On a 5 minute, might be 3 or 4 hours. On a 15 minute, might be several hours, maybe a day. On a daily chart, it might be several days, might be weeks. On a weekly chart, it'll be months, and so on and so forth. That's how it works. Excuse me a moment. Let's have a frog in my throat. That is how it works, and that was the schematic that you saw, where you're constantly moving from accumulation to distribution and back again. Within those phases, obviously, you have the primary, which is the move higher or the move lower. Breaking that down further, you then have the secondary. This is all part of Wyckoffian principles. There we go. You have the secondary, you're in primary, you move into a secondary, you're back into primary, then you move into secondary, you're back into primary, then you maybe start to see the distribution selling climax, volume, congestion, support and resistance all comes into play, candles and candle patterns. Then we start a reversal of a primary into a primary bearish, down the hill we go, into congestion, secondary reversal against the primary, which is now bearish, back into secondaries again, down back into the primary, and then ultimately at some point you arrive at the accumulation and the buying climax, and the whole cycle starts again. That's what price action does in every single time frame. Price action is self-similar, as I said before. We've used many analogies. What's the cauliflower? I can't remember.
It's a fractal.
Yeah, it's basically wherever you see the other analogy we often use is of the Russian dolls, where you see a tiny little doll inside and then a larger doll and so on and so forth. You go up and down this replication of the same thing in different time horizons, and really that's all it's about. Just pop over onto the 30-minute for a moment, onto the daily, sorry, Don, very quickly. We're in the European session, so we've got a volume starting to pick up a little bit. You can see there in the overnight it's been pretty much average. We're now starting to see decent volume coming into the market. On that candle that Anna's highlighting there, what have we got? Well, we've got an effort to rise, and the market's closed with a decent wick, not huge, but certainly a wick to the upper body, narrow spread candle, and we've got some decent volume underneath. So clearly the market's looking a little bit weak at this point. And we go down to slow time frames to check out what is going on our slower time frames. Yeah, you can go down to the daily. Now, in the context of what is going on the daily, what's interesting here is several aspects. First of all, if we look back 2 days ago to that very large candle there, there's several things that strike you instantly. First of all, the amount of volume associated with that candle, which was the highest on this particular chart. This is going back to, where are we, middle of May, so we've got quite a long period here. So the first thing we're seeing there is a lot of volume coming in on that particular time frame, on that particular day. In other words, what happened? The market fell pretty savagely, and then at some point the buyers came in big volume. The market makers did not want to see this market fall further, so the market makers stepped in and they've started to buy, and they've bought in volume. Looking at the daily chart then gives you a heads up, it gives you signals. and it just creates the framework and context for whatever it is you're trying to do in the day. Now, the day after that, we saw decent volume coming in. We saw a bit of weakness. There was a wick to the upper body on that particular day. It didn't follow through. It certainly didn't close at the high of the session. It closed well off the high of the session. But also what we're doing here is we are trading around the volume point of control. We've got the yellow line there. We've got volume building in this region. So clearly we are in a phase where price action is oscillating and likely to do so. And until we see a strong break away from this region, then certainly from a much slower time frame trend perspective, if you were looking at this as a trend opportunity, for example, then you would have to be patient, because what the daily chart is saying is that we've got a lot of price-based support and resistance around the chart. We've also got some fairly heavy volume based around the chart. So the probability is, for the time being, on this time horizon, we're going to see further congestion for lots and lots of different reasons around this particular region. The other aspect of this chart, which is fascinating, is we talk about double tops and treble tops, triple tops and double tops and double bottoms and triple bottoms. Well, actually on this chart, we've got 4. And they've all hit exactly the same price point at roughly 72.34. That happened 2 days ago. Prior to that, in the early part of October, what do we have there? Another nice example, this is a 2-bar reversal. If you overlay those 2 candles, one on top of the other, what have you got? You've got pretty much a replication of what happened 2 days ago here. In other words, you've got some more serious buying coming into the market, and indeed the market rallied off that candle formation. 2-bar candles, 2-bar reversals happen all the time. They're very strong signals. It's very easy to visualize them in your mind. Overlaying one candle on another is very easy. Overlaying 5 or 6 candles is not so easy, which is why you need multiple time frames. But scrolling over to the left, in the middle of September, we had another test of that platform of support. It's held and it's rallied from there. And then further over back into, where are we, middle of August sometime. Again, same sort of thing. So we've got a very strong platform built in that particular region. And equally to the upside, you start to bring in the support and resistance. You can see in the middle of September there, we had 3 tests. You know, that is telling you that the market is not strong here. It's testing, it's trying to break through. And if you look over to the left of the chart, you can see one of the reasons why is because you've got so much price congestion in this region. For that market to break through that particular deeply built congestion area is going to require some significant volume. And as you can see, if you look at the volume bars associated with the middle of September, the volume there is not particularly strong in terms of the attempts to rally. It's pretty weak, because when you compare it with the volume over towards the left of the chart in May and June, you can see there the volumes are much higher. So from a comparative perspective, the volumes through the middle of September were average, if you will, average to relatively low. So in other words, the upside momentum that came into the chart at that point is really not following through. And what's interesting, where Anna's cursor is just immediately to the left of that price action, where you've got that widespread up candle, that one. Look at the volume associated with that candle. Why is the volume average on a rapid move higher for the market when prior to that we've seen much higher activity in terms of volume deliver less price action? In other words, that candle there is sending a warning signal that this is possibly a trap move, because the market makers are not participating. Why are they not participating? Because the spread of that candle is too wide when associated with the volume. There's not enough effort gone into that candle, because if the candle 2 prior to that takes that amount of effort and that amount of volume to move that much, how come the markets move double on half the volume? It doesn't make any sense. It's anomalous. The market makers have stepped away from the market. They move it into congestion before moving it lower. That is what this business is all about, and that is the power of VPA. This is a daily chart, but you can apply it in any particular time frame you like. I'm just going to switch off for a moment. move over to NinjaTrader for a moment. Just doing that now. Let's just go back over here. Right. I just wanted to show you this because I've gone to everyone's favorite, which is the euro dollar. I have to be honest and say that it's not a pair that we trade a great deal, but it is extremely popular, as I'm sure you appreciate. And what I wanted to show you here was just what happens at session crossovers. And this is European, and then we'll probably get the same when we get to the UK markets, which is in about half an hour or so. And what we saw was, I was watching this and several other pairs at the same time. This is a classic trap move. This happens in session crossovers. It happens in all sorts of other time frames for all sorts of different reasons. It can be news related. It can be event related. It can be session crossover related. It can be London fix related. It can be options expiry related. It can be rollover related. It doesn't matter. You will see this the whole time. But session crossover is a classic example, and this is just one. If you look at the bottom here, the nice thing with NinjaTrader is it's very easy to pick out what time you are in the market. This is 7 o'clock London time. So in other words, Europe's just opening. So all this volume through here is through Far Eastern Asia. So in terms of comparing volume, this is the region we're looking at. This is in real time, so we can look at these volumes in a comparative way. But what we saw at just 7:05 as the market got underway, we had this very rapid move higher. Now you can imagine traders at this point all jumping in because the fear of missing out is one of the most powerful emotions that can be triggered in any market. It affects us all. We see a market that's moving rapidly. Our natural inclination is to jump in because we don't want to miss out. We want to make some easy money. The market's fast moving. Maybe it's been a little bit sluggish. We're getting a little bit twitchy. We're a little bit bored and we just want to make some money and get in there. The market suddenly snaps, goes very quickly higher or lower. We jump in and then we get trapped. That's what this move is all about. That's what this indicator does. It's the volatility indicator, which you've highlighted many, many times. It is incredibly powerful. It is very, very simple. It works on average true range. It's looking basically at what should be the norm for this particular time frame for this particular pair. In other words, what do we expect to see in terms of price action? And if that moves outside what we expect to see, then that triggers the indicator and it triggers in real time. You get these little purple triangles top and bottom. The same is true on MT5 where it's dots, and on MT4 it's triangles. But what this candle is telling you and what this indicator is telling you, hey, there's volatility in the market, the price action is rushed up, it's triggered in real time. So once the market moves outside the average true range or the candle, it's triggered. It tells you instantly, and it's an alarm bell. It's a warning signal that there's volatility, the insiders are in there, and you just got to be careful. And the classic is that within the spread of the candle, the market either oscillates inside the spread of that candle and traps your emotions in terms of not knowing where the market is going next, or alternatively, you get, as here, we had this very strong reversal straight away. Immediately, the market moves back inside the spread of the candle, and everyone's trapped in there, regretting their decision to jump in. We had another one to the downside. This didn't close within the candle, it just continued on down. If subsequent price action validates the volatility, that's fine. It's a question of being patient. But 9 times out of 10, it reverses. That's what you expect to happen. On this occasion, it was validated. Why was it validated? Because we had rising volume under a falling market, so it's continuing to validate it. But on this occasion, it was a straight trap move. If you're in the market, you've got a decision to make. And I've said many times before in these webinars, if you've got a position in the market, if you're long and you take advantage of it, fantastic. But if I was long the market and this occurred, I would close out straight away as soon as the volatility comes in, because I don't want to be sat there either strangled in a reversal, or alternatively squeezed in a congestion phase, which may extend for some period. Now, at the end of the congestion period, the trend may well continue in the original direction. That's fine, but I don't particularly want to be squeezed, my emotions squeezed in, a phase of price action like this, for example, which is quite painful to sit through. Ultimately, you may be okay, but I don't particularly want to sit through any of that. So if this comes in, you've got a position in the market, excuse me, I will close out. If I'm not in the market, then it's a question of being patient. Either wait for validation or wait to see what happens in terms of congestion, or indeed the reversal as we've seen on this occasion. Excuse me, I'm just going to switch off for a minute. Let's just see what else is happening in terms of the CSI. This is on 5 minutes. We've got the dollar is rising fairly strongly on 5. Let's just see if that's occurring on 15 as well. So we've got some fairly strong dollar buying at the market at the moment. The commodity currencies you can see up here in New Zealand is still pretty overstretched. The Aussie dollar is pretty overstretched still. Down the bottom, we've got some strong selling of pound on 15. We've got this. Really, this just makes the point that kick up in the euro. We've had this strong selling of the euro. We went into congestion phase, a little bit of pick up, but then we had re-establishment. Now we've had a little reversal again. Now we've got re-establishment, the negative aspect or the bearish sentiment towards the euro. It's continuing on down. And as Anna said, when you're up at these levels, if you're looking for the opportunities as a reversal trader, fantastic. I have to say, my preference is always to look for reversals, but that's just me. I like to trade the maximum amount I can in terms of taking what I can out of the trend once it starts to develop. But that comes at a price, because the currencies and currency pairs, as Anna said, may well stay overbought and oversold for some time. You have to be patient. But because this market is one of mean reversion, ultimately, these currencies will move. They have to. They can't stay up there forever, and at some point, they will move in your chosen time window. And it's a question of being patient. That's the first thing. And the second thing is, you have to allow for this buffering that goes on up and down here, and you allow for that in setting a wider stop loss. So your stop loss will be much wider if you're looking at reversal opportunities. So if you're looking at this, for example, you're looking maybe at the Aussie yen or the New Zealand up here and the yen down here as a possible short, then you've got to allow a much wider breathing room for your stop loss to take advantage of that opportunity. Now that opportunity will deliver much more for you because you've put more risk on the table. Trading is all about risk and return. If you put higher risk on the table, then the return ultimately, if you're right, will be higher. Why? Because you're getting into the trend early. You're not waiting for this to develop. Now, dollar traders right now, and indeed several others, but if we're looking at the dollar particularly, this is the dollar shooting up here. You wouldn't be looking at the dollar CAD right now, for example, on this time frame, because the Canadian dollar is rising with the US dollar. And I don't even need to look at a chart to tell you that there isn't much of a trend going on there. It may be driven marginally in terms of a differential rate of gain, but in terms of what is going on right now, that is not the place to look. The place to look right now would be perhaps the dollar Swiss, where you've got rising dollar, you've got strong buying of the dollar on this time frame, and you've got equally strong selling of the Swiss franc right now. Now, if you were to jump into that trade right now, in other words, short buy the dollar Swiss, sorry, not short, buy the dollar Swiss, your stop loss will be much tighter because that trend is already underway. So there's no need to set a wide stop loss. You can tighten it up to within a few pips because you're jumping into a position that is already developing a strong trend. We've got very strong buying of the dollar right now and very strong selling of the Swiss franc. And that's the trade-off that is always the case when you're trading. Do I want to trade reversals? Do I want to jump into a trend? Am I able to be patient? Am I not? What am I looking for? And what am I trying to do in all the various time horizons? We just head over to, I've got the dollar index down here. You'll see why that's going on. This is the dollar index. This is on 5-minute time frame. At the top, I've got the euro dollar. This was our trap move here. We're still seeing that occur, but then we're now starting to see This was the move in the dollar, so you've got obviously the inverse of that, selling in the dollar, and then an instant snapback reversal, and we're seeing this dollar strength continue for the time being. Just have a look at the yen. It's the equivalent. The yen's been in consolidation a bit, hasn't been moving that strongly, but if it certainly drops through this floor of support in this region, then it looks as though we've got some more yen selling coming into the market, and this is the euro yen, so you'll see the inverse again. And obviously, what you'd also be looking at, you'd be looking at what is going on in terms of indices, in terms of sentiment, because the yen is a barometer of sentiment, risk on and risk off. It's all about related markets. Just go back and see what's happening on the euro dollar. The other one I was also watching was, let's just change this over to euro Aussie, see what's going on there. What was interesting about the, where are we? Let's just push that up to 15. There we go. This is 8 o'clock last night, our time, and up until that point, we had seen a very strong selling in US indices. It was a fantastic trading opportunity. We did a webinar on the ES yesterday, and there was just money to be made hand over fist. But then at 8 o'clock, we had this very strong reversal came in, and of course it's reflected in the currency markets, and exactly what we saw here. Ton of volume coming in, heavy selling coming in other words, buying of the Aussie, a shift in risk sentiment reflected in the commodity currencies and reflected in the yen pairs as well. Again, you see the power of the volatility indicator, strong selling. Then we get the volatility come in. What do we see? An instant reversal back into the spread of the candle. On this occasion, what were we looking at? An hour here. Market drops again, and you think, fantastic, we've got decent volume under it. I think there was Aussie news. I think there was also one of the speakers from the RBA as well. And obviously at our time overnight, you will see a lot of Australian Far East news, Chinese news, all the rest of it coming out, and that will be reflected in the currency pair, commodity currency pairs. Volatility is triggered again, back inside the spread of the candle, this time for a much longer period. Now we're starting to break down a bit. But what we're starting to see here, we've obviously got a pick up in volume. We're very aware of the fact that this is 8 o'clock. This is London coming to the market. So we are very conscious of the fact that reversals at crossover phases happen all the time, relentlessly. And you'll often see the trap move ahead of the switchover or the crossover. You'll see a market maybe moving up very strongly. Perhaps the volume is not very strong. You can instantly identify as a trap move, and then London opens, bang, and it goes in the opposite direction, and everyone gets caught again. Got decent volume building here. Got a very narrow spread candle here. So we've got quite high volume here. The spread under this candle is not huge, and the volume is quite significant. So you've got a relatively narrow spread candle here, but you've got decent volume under it. I would have expected that price action to be wider than that. And certainly under the next candle, we've got virtually no price action at all, very small doji candle, and a ton of volume coming in underneath it. But going back to the point about the time horizon, if you look at the trend monitor, we've had bullish phase of price action supported by the trend monitor. Then we go into the transitional phases. This is just a classic crossover. The darker blue as the trend runs out of steam into the darker red. We're seeing the transition. Are we going to see a full-blown transition? The answer is yes. And we're into bright red for the remainder. What the trend monitor does, it helps you to manage the emotions of those secondary reversals that I mentioned earlier. Those are the killer points at which all traders struggle. It's the point at which you're in a position, you've got a strong move in the market, and the market then pauses in the primary and starts to reverse into the secondary, and you don't know whether that is a true reversal from primary to primary or whether it's just simply a secondary. Much of that will be reflected in terms of the VPA analysis you do. A lot of it will also be supported by what the trend monitor is doing. So if you're looking at this at the moment as a short position, which perhaps you've been holding for some time, there's not a flicker on the trend monitor right now, and you wouldn't expect there to be. But if you had this running as a 1 minute or a 3 minute or a 5 minute in a faster time frame, you would see transitions. And ultimately, if that change in sentiment ripples through on the trend monitor, for example, and you start to see a shift here in terms of a color change, that is giving you an initial warning signal that perhaps this trend is running out of steam, and maybe you are starting to see what went on here, which is a reversal from primary to primary. In other words, from a bullish trend into a bearish trend. I'm just going to pass back to Anna at that point. Switch back to MT5 again.
When we first started, we were looking at the New Zealand yen. But if you remember, if you recall, what I also said was that the Australian dollar was tracking, as you can see here on the CSI, it was also rising strongly. This is the 30-minute CSI that I have on this workspace. That's the New Zealand, that's the Aussie, and that's the Japanese yen down here. So we were talking around about here. That was very overextended. We saw this little shooting star candle on the 30-minute chart. This was all obviously very overextended here as well on the Japanese yen. But as we can see, it looks as though the New Zealand yen wants to push higher. But the other pair that we also use for a view of overall market sentiment is the Aussie yen. And in a way, the Aussie hasn't actually reached the extremes that the New Zealand has. So getting back to, well, you know, what do I do? I'm on the faster time frames. I've seen this. My 30-minute, I said, is my benchmark. This is setting up as a potential a reversal. It's going to be a counter trend on, as we looked at the daily chart, where the New Zealand yen has had a very large up move overnight. The same will be on the Aussie. If I just move the Aussie over here, let's just move it to the day, and you'll find, yeah, it looks pretty much like the move that we've seen on the New Zealand yen. But just let me move that back to my 30-minute there. Just a second, because what I want to show you before we close is, what do you do if you are on the faster time frames? It's awfully interesting that we can see on the slower time frames, but you're looking for an actionable trade. And we haven't looked at it very much in this session, but we'll look at it in much more detail next week and in the rest of this series. And this is where we use a chart that is non-time based. And for MT5, we have a Renko chart. Now, what a Renko chart does, it is actually a fantastic way. Somebody asked the question, could you explain about a price cycle? And the Renko chart presents it to you without any noise. You don't have wicks to the little bricks that you see there on the chart. And it really does explain, it sort of visually explains where we have, obviously, that was we had a sharp move lower. On the time chart, you would see accumulation, you would see a period of, you see candles with wicks to the top and the bottom as the pair is trying to base as it were, and then it was start to move higher into a primary trend, a reversal of the trend lower that we had there. In fact, if I show that, no, it doesn't. I haven't got enough data. There we are. That was the move lower. This is what we're looking at at the moment, which is the move higher. Let's look at this move here. This is clearly a trend higher, but nothing moves in a straight line. This is the pullback, and it goes back up again. Then perhaps it moves sideways, and then it moves up again, and then you have a pullback. Then it moves up again, and then it pulls back again, and now it's moving up again. But it's kind of peaked here at 79.98, which sort of mirrors what we can see on the CSI, that it has reached a point where a potential reversal is coming. Whether you take that, as I said, depending on if there's enough in the range of the pair that you're looking at. And as I said, with Aussie yen, you also have to put it in the price action in the context of what the broader market is doing, because it reflects either risk on or risk off sentiment. And we also have to be aware now that we have 3 minutes to the London Open. Is the London Open going to carry on with the sentiment from Asia, or is it going to do a complete about face? Now, how that looks in comparison, say, with a time chart, you can see here what the Renko does. It smooths everything out, and it smooths it out to the extent that it helps you not only identify those points on the chart where possibly there is a trade to be taken, but it also, much more importantly, it helps you to get in. There's all sorts of other elements that you have to take into account. There's the support and resistance. There's we have an indicator, we have a Camarilla indicator, where the support and resistance levels are, some are more important than others, as it were. What is likely to happen? In fact, on this one, on the 3 minute, the R6 is the most extreme, if you like. So this pair has already reached R6. You know, you would have to go to the hourly chart here. Let's have a look, see what the hourly says. On the hour, it's only in the R3. The indicator works in a unique way, in as much that on time frames up to, but not including the hour, are refreshed every time there's a session rollover. So you get fresh levels, as I said, every time the market kicks over. That's at about 10 o'clock UK time. On the hour, the levels that you see on the hourly chart, they're going to stay there for the rest of the week. So you have to bring in the interplay with significant price levels, which will also help you to determine whether on the faster time frames you are actually seeing a genuine reversal or simply a correction, and the slower time frame price action is going to continue. And what's also interesting here on this chart is the prices in congestion. We know it's in congestion because we've got the volume point of control at 79.96. So the volume point of control is volume, price, and time, and it's the point at the chart where traders are happy to transact. They don't have any desire. There's no desire to move the price either one way or the other. And at the moment, so if you see a chart in this particular phase of price action with a congestion, with a VPOC, then you really just have to be patient. And that is also reflected on the Renko. Although it is still showing blue, you can see quite clearly where the resistance is. We can see quite clearly where the support is, and the VPOC is sort of somewhere in the middle. And we really have to just wait for London to open. Anything else you want to say about that, David? That's it. Right. Any more questions? Let me have a quick look. Oh, are you? Oh, fine. Okay. No. All right. That's brilliant. Okay, Diane, while you do that, then can I just what can I say? Thank you so much for coming along. The indicators that we have loaded up on our charts, we only looked at we looked at the currency strength indicator, we looked at the VPOC. I think, did you mention the volatility indicator, David, as well? Yeah, just in passing. But if you want more information on the indicators that we've developed for our own trading, and also that are part of the forex program, you need to go to quantumtrading.com. You can just buy one indicator, and in fact we always suggest, people often write in because there are so, the site can seem a little bit overwhelming when if you've never visited before, and we always say, look, just buy one. And the one indicator that we always say suggests that traders use, and that is some kind of currency strength indicator. Hopefully ours, we know what has gone into it, and it will really help you understand. It kind of sits behind this idea of the price cycle, so you can see exactly where a currency and a currency pair is in the cycle. And you can just buy one, you can buy a discounted bundle, or you can buy a complete package, and if you buy one and you decide to upgrade, you always get a credit. It's a lifetime license. They're all free upgrades, and we do offer a 7-day money-back guarantee. You get 24/7 support every day of the year. You can transfer from platform to platform. So if you go from MT4 to MT5, that's fine. And if you want to go to NinjaTrader as well. But with NinjaTrader, the complete package is slightly more expensive because there are more indicators. The complete package is $894 and NinjaTrader is $1197. But in your complete package, whenever we develop a new indicator, the Camarilla was a new one. We've developed a new Renko indicator for Ninja. If you've bought the package and invested in it, they will be automatically added to your package. So once you pay us this package price, whatever we develop here on in is simply added to, as I said, your package. This is the program. This is the screenshot from the website. This is where we are actually at this moment broadcasting to you. This is the cost for the program, but it does include all the indicators. So it's not you don't have to buy the indicators and buy another set of indicators. Once you have if you've got the indicators full set, you just pay the difference for the actual education part of the program part, and it's less than $500. You can't buy the education on its own. We only sell it as wrapped into the indicators because they are an integral part of the program. It's over 50 hours of video podcasts. There are downloads. There's all sorts of goodies in there and resources. It is a self-directed program, but we do add to the content on on a regular basis. And more details is at quantumtradingeducation.com. You can either email me, Anna@annacouling.com, or David at quantumtrading.com. And finally, if I could just mention, I seem to have mislaid my slide on this. We've actually started what we call a VPA trading platform chat room, which is open actually to our forex program traders, but also anyone if you're interested in VPA, volume price analysis. It has forex traders in there. It has all sorts of traders. It's a really, really nice chat room. I'm so delighted we came across this platform. We've experimented with all sorts of different things. It's got a calendar here. It's just a really cool platform, I think. So because volume price analysis, you can apply to any market and any instrument. We want to talk about forex, fine. Talk about stocks, fine. The principles and concepts are identical. Is there anything else you want to add to that? So right, okay. Well, all it remains is for me to say thank you so much for coming along today. I hope you enjoyed it. We are back next Tuesday, probably at 7:15, not at 7 o'clock. If you've got any questions, as I said, just drop me an email. I'm more than happy to answer you. Have a great trading day. I think most investors will be glad October is coming to an end, and then we'll have the Santa Claus rally to look forward to. But for traders, it couldn't be a better time to be a trader, regardless of what you trade. So have a lovely day, and we'll see you next time. Take care.